Everyone, how's it going? Welcome to our first ever podcast that we're doing in regards to investing psychology. So I want to introduce Nick, but before I do me a favor, guys and gals. We want to get as many people here. So if you can do me one quick favor and smash that like button so that the algorithm picks it up. And if you're not subscribed yet, do me a favor as well. Subscribe to the channel because we're going to keep bringing more and more info like this. So Nick, what's going on?
Hey,
All right.
Yeah, I think there's never been a better time for you and I to be doing this. And as we've experienced diving into it ourselves, this was a presentation that I did the last time we spoke about market psychology. And if you guys can see there, I hope it's big enough for you. You can see these long lines that I drew out based on how the chart looked before. And it's really beautiful. I mean, that's the nerd in me speaking to you guys right now. But to me, it's really beautiful the way that this works and how it looks and how these kind of supports and resistances kind of magically set themselves up. And you can really do a significant amount of predicting based off of what we see here. So this was the last time that I presented, and this is the chart today. Based off, this is all psychology now. This isn't just like, geometry and shapes. This is what you learn in technical analysis that is shaped through psychology or shaped by psychology. You can see there's this middle channel of support right here. You can see that there's a top a channel of resistance, a bottom channel. And we're not going to get into this today. Hopefully we can on a future live together. But I just wanted to give you guys a visual representation of how powerful this is. That regardless of what the fundamental news is, for example, when I had so many of my friends telling us up here, oh man, Bitcoin's going to go, through the roof because, Trump's in office and he's the most bullish administration in history. I was looking at the chart, looking at the overall market psychology and the pattern, saying, you know what? Again, this is a game of probability, right? There's nothing guaranteed that in any of this, but we play probabilities. And when I looked at the psychology of the market, I thought, in probability, it's very likely that we're going to break this resistance. Why? Because it goes back all the way to 2021, 4 or 5 years. Doesn't mean it's impossible, but it's unlikely. And sure enough, we barely pierced through it, despite, like Gavin said, all that fundamental news. And when we couldn't pierce through it, we fell significantly to the downside, right towards this middle channel. So I wanted to show you guys that because I think it's really powerful to look at and get a visual representation of the things that we're talking about.
Yeah, I mean, when you look at charts like that, Nick, and this is something, and then you're experiencing what we've been experiencing. Like if you take a look at like the majority of other cryptos, like take a look at ETH, take a look at ADA, take a look at Polkadot, take a look at not XRP. XRP's done very well. For those of you who invested in XRP, congratulations. I was actually, I told you all you're all going to make a lot of money. I just don't believe in the crypto fundamentally. But when you take a look at it, all the altcoins have dropped way further down than Bitcoin. And, it was funny because in the last bull market, so many people were calling for $100,000 Bitcoin. Like everybody was convinced that's how high Bitcoin was going to go in the last bull market. And, we got to 70 some thousand dollars. I don't know, 72, 73,000. And then we just nuked down. And I was sitting there going like, oh, this can't be done. This can't be done. And, we had the 4-year cycle, which we're kind of in, we're still kind of in that 4-year cycle. Within that 4-year cycle, if you take a look, Nick, pull that chart back up again real fast. Let me show everybody. Like we've actually been in a bull market since the beginning of 2023. And a lot of people don't realize that. Did you, you got to share your screen again.
Can you see it?
No. Oh, wait, hold on. I may need to add it to the stage. Oh, there we go. Now we can. All right. So, take a look at, go back to like 2023, the beginning of 2023, and
Right
you'll
here.
see, yeah, right there, 2023. Look at that. That's a bull market, guys. Like that's the beginning of the bull market. So we're now 2 years in a 4-year cycle. You know, it's not like history often repeats itself, or history doesn't repeat itself, but it often rhymes. Well, you can clearly see here that we've got a cycle that began literally January of 2023. And so it's really important that, like, just because Trump's coming out with all this stuff, remember he's got like 2 years to like crash this thing and then bring it back up if that's what they're trying to do, which it almost seems, I don't know. It's like there's so much good news coming out in crypto. I find it really, really hard to believe that they're trying to crash it. But maybe, I mean, at the end of the day, we need liquidity in the market. And that's the one thing we don't have is liquidity, at least in the United States. But psychologically, you can't be stuck on, I believe it's going to go to, 250,000. You can believe in your strategy because you understand your strategy, but you can't control what Bitcoin is going to do. And even in your strategy, like I can't guarantee what the strategies are going to do. All right. I can't guarantee what the strategies are going to do. I can only guarantee how they work under certain conditions, right? Under certain triggers. That's the only thing. But those things need to be triggered, right? So and this is something that Nick and I have been working on personally, is that don't get lodged into a thought pattern of this has to be the way. It's Igor and I used to say, well, we know Bitcoin is going to go up. And now I kind of, I've heard him say it once or twice in the last few weeks. And I go, is it? Will it? Like, I mean, maybe in the long run, hopefully, maybe, I don't know, but will it? Who knows? Anything can happen. I mean, people were probably saying that about Excite and Yahoo, right? We know Yahoo is going to go up. Everybody uses Yahoo. And then Google came along, and even if you want to go a little bit more macro, think of Google compared to now ChatGPT and all these AIs. Like, I don't use Google AI. I don't even know if Google has an AI, but I don't go to Google anymore. In fact, when I go to Google, it's like, it's so archaic to me. I'm just sitting here like, why is this not telling me exactly how I should write this paper, or write this blog or whatever? So it's really interesting how this is one of the things that I've definitely gotten myself unlodged from, is like thinking in absolutes.
Yeah. Along with that, I brought up this slide here that we created. There are basically 10 key psychological and behavioral traps you want to think about. But Goven just talked about those two bottom ones right there, which is confirmation bias, which is a huge one, which, by the way, all these behavioral and psychological traps or dynamics exist, not just in market psychology, but in relationship psychology. They exist in business. They exist in romance, because it's based in the psychology of human behavior, right? So one of the things that Goven was talking about there is the concept of confirmation bias, which is that once we have something in our mind that we believe, our minds are wired, they're structured to then filter for anything in our three-dimensional reality that matches that belief. So if you want to break this down simply and think about the origin of it, we go back to our great-great-great-grandparents running around on the plains of Africa, knowing that they could be facing the threat of an apex predator at any given moment, right? So they have a belief that a certain area is vulnerable to, lions and snakes or whatever. That primordial brain then gets hyper-wired, hyper-vigilant for any kind of movement or shape that's going to look like a snake or look like a lion. And so anytime we hear something or see something that might represent one of those shapes, that primordial brain is going to be on high alert. Now, often it's going to do that at the exclusion of everything else in the landscape, because the more that our ancestors the more of our brain capacity was focused on that threat, the threat of the lion or the snake, the more likely they were to survive. It didn't matter if there were flowers lying around. It didn't matter how many berry bushes there were, or, you know, apple trees were around. If we believed that there was a potential threat in this area, in this space, then our brains, that primordial brain, would become hyper vigilant. And then we would seek this concept of confirmation bias unconsciously from the environment. And this is what we do now with the marketplace, right? We get a bias that Bitcoin's going to 1 million, right? I'm not saying that it is, I'm not saying that it isn't, but we get this bias because we become so enamored with the technology or whatever. And so we start looking at only the elements of reality that match that bias, that match that prediction. So all of a sudden Trump gets elected to office. It's the most crypto-friendly administration in history. My bias is Bitcoin's going to 1 million. Now I'm all in, and I haven't taken into consideration this other chart that I showed you guys, right? That, you know, despite the fact that it's the most bullish administration in history, we're also at the top of this channel, top of the psychological channel. And so the probability would suggest that actually there's at least equal probability that the value is going to go down, then the value is going to continue to go up. And from my perspective, obviously, as I've shown you guys here, my perspective was the opposite, which leads us to another important point. And I'll just jump around some of these for you guys, which is the herd mentality. Point number 4 is that—
Switch your screen there.
Thank you, my friend. This is point number 4 for psychological and behavioral traps. That herd mentality is that people, you know, we are herd animals, whether we like it or not. We feel so separate from nature, but we still function and behave very much like herd creatures. Now, that's our default. It doesn't mean— one of the beauties of being human is that we can separate ourselves from these default biological functions, from these default unconscious ways of being. And we can do that through, number 1, becoming aware that they exist, and number 2, creating a practice for ourselves to overcome them. And I know Gwen spent a lot of time creating practices like I have in his life, so that he can overcome these these defaults. And so one of the things that we want to look at, and it was actually said a very long time ago by Warren Buffett, this idea that you want to be greedy when people are fearful and fearful when people are greedy, is because that herd mentality, once it kicks in, and this relates also to for me, a very powerful form of technical analysis called Elliott wave theory, which basically, if you look at the chart there, you see how it looks like it's formed almost in waves. And in Elliott wave theory, I'm not going to get too much into it, but you basically will have 3 progressive waves and then a series of regressive waves before you have the next progression of waves. And this is the way evolution works. It's the way overall markets work. And you can see these patterns. And actually, when the patterns look this clean, it's typically an indicator that the market is a healthy market, right? And so basically what happens with the herd mentality is you have an asset, you know, a brand new something, technology that's created, and people slowly start to come into it, you know, early adopters. And then all of a sudden it picks up in reputation, the value increases, more and more people hear about it, and you have this surge in interest and investment. And this is when the herd kicks in. It's very important for any new technology, you know, they call it the tipping point, you know, any new business. Once it becomes viral, that's the word we use now with, you know, social media, all of a sudden the value goes exponential because the speculation and the herd mentality start to drive the value through the roof. Well, all of a sudden it gets overpriced and people who are smart start to sell, especially the ones that got in early that made this huge profit. And anything that moves up very quickly, typically in a marketplace, will also drop just as quickly. You know, we like to say what goes up must come down, right? We say that all the time. And so in this case, you know, Bitcoin's no exception. In fact, what's interesting, and maybe we can cover this in another live, is how Bitcoin retraces to these Fibonacci levels, meaning that it repeats a pattern of retracement from very large movements upwards to about 70 to 80% of where it started. And then it starts the next the next movement upwards again. But anyway, back to herd mentality and on to how these markets progress. So you see again, all right, now all these people got scared. The herd got scared. There was mass sell-offs. That's what all this red is. And this is where Warren Buffett says, this is where you want to get greedy. This is where the smart investors get greedy, because they realize, if you zoom out far enough, if I can do that here, you can see that there's a support line that will run all the way back here. So we know with a good deal of probability that the price isn't going to fall below here. So I'm willing, as a smart investor, to come in and start investing a bit again, because I'm getting greedy, because people are so fearful. That's why that fear and greed index is so powerful, for those of you that have seen it. And all of a sudden, the investments start to pick up again. Investors are building more confidence. They're still very shy, though, based off, this is all psychology, guys, very, very shy based off of this last movement. So now that they made some profits, they sell off again. You can see the red, right? But once it holds this level, which it did, people buy in again. Now, this is what we call the third wave. You can see 1, 2, 3, 4, 5, right? The third wave in Elliott wave theory. And this wave is typically the most exuberant. Why is it the most exuberant? Well, of knowing, wow, we've done this before. It's likely going to happen again. All of a sudden, people start diving in and buying it up again, and it drives the price through the ceiling once again. And now we break this old psychological level, right? Once we've broken that, as you can see here, there's exuberance again, because the sky feels like it's the limit. Just like whenever we break this one up here, it's going to happen again. The sky will be the limit. And all of a sudden we've got, you can see, if you can start to look at these charts and understand the way psychology plays out, there's still a pattern that it starts to honor.
Where would you put the support for this?
I want to show you something really cool. So let's erase some of the past. So let's take that yellow line you just drew, drew.
Uh-huh.
And I want you to pull it back, and I want you to drop the angle. So keep dropping it, keep dropping it, keep dropping it, keep dropping it, keep dropping it right there. Okay. Now I want you to erase the future I want you to erase some of the past for a second. And I want you to see where the technical analysis would have started. So what we would have seen from a technical perspective is that after that very first little bump, which wasn't little, by the way, it just looks little on the chart now in compared to the rest. But what we would have seen is, if you now copy and paste that line real quick then.
Paste it where?
Anywhere. And then you'll just drag it down. There you go. Now just drag it right, without changing the angle, just drag it right down underneath it. Keep going. Drag it down. Notice that the angle's not changing. It's a parallel line. Boom, right there. A little further back up. Now what you want to do is you want to find where that line touches the most amount of points. So bring it just a little bit further up from what I can see on your screen. Don't change the angle. Don't just keep the parallel.
I know. I have my magnet on.
Okay.
Let me turn my magnet off.
Okay. All right. So what we would call that parallel is, we'd call it a channel. So what I would do is, if I had Gaven's mouse, I would pull it up just a little bit further, and that would have been the original kind of original support that we would have looked at. You're bringing it too far forward though. So bring it all the way back to 2018. Bring that support all the way, because we're going to erase a few years there. We're just going to look at what it would have been. Yeah, all the way back, all the way back, all the way back. Good. Perfect. Okay. So somewhere in there, that would have been the original support. Okay. Now I want you to look at the top line now, that original resistance. So when we were first charting that, this is what's fascinating, is we would have seen that there was a diagonal, both a diagonal and a horizontal psychological resistance. The horizontal one Gaven had drawn there earlier. Right now, we're just seeing the diagonal one. But what happened is you can see, once Bitcoin's price, once the value broke through that diagonal, it went parabolic, right? So what it did is it broke through the horizontal. So can you draw a straight line, Gaven, that goes from the top of that first little bump?
Here?
Yeah, exactly. Now draw it horizontal. So it's going straight to the side. Nope, down, bring it down, bring it down. There you go. Horizontal. Perfect. See that? You see how it starts to match up now with supports and resistances? So you get horizontal parallel supports and resistances, and then you get also diagonal supports and resistances. So as the price value there broke through that horizontal resistance, it started to go parabolic. When it broke through the diagonal resistance, it went even more parabolic. All right. Now watch this. Now take that same diagonal, the top diagonal, Gaven, and copy and paste it again. And this time I want you to place it above. And there you go. Perfect. And now just lift it and move it over to the right. Good. And you see, guys, the same pattern happened all over again. He hasn't changed the angle. It's the same exact angle. And what happened is we had created a new resistance point, and Bitcoin broke through it again. If you take that horizontal line and you copy and paste it, the horizontal one, not the diagonal one. Yeah, that one right there. And you lift that. Now, if you put that and give it a little roof there on that price action back in 2021, there you go. So the same thing happened again. You guys are starting to see the fractals now, right? When I say fractals, you can see how these waves start to repeat themselves. So Bitcoin broke through that horizontal resistance again just recently, and it broke through the diagonal resistance. Yep, and it broke through that top diagonal resistance. Thank you for drawing that. Okay, so if history repeats itself, okay. Now let's try to, if we can, let's get rid of the circle that you drew, the two circles. Those.
Oh, whoops.
If we can delete those. So if history repeats itself, you can see how the fractal could likely play itself out again. If Bitcoin really is the future of commerce, if it really does solve inflation, doesn't just solve inflation in our country, but solves it globally. If it becomes adopted as the global currency and usurps the place of the dollar, right? If all these fundamentals, which are the big ifs, if they come true, you can see how this fractal will repeat itself again. Get rid of that top horizontal line. Actually, you can get rid of both of those horizontal lines so it doesn't get too confusing. No, that was the diagonal one, the horizontal one. There you go. There you go. Perfect. So now you're going to copy and paste that diagonal line one more time. Okay, bring it to the top of that. Okay, you can see now Bitcoin's back in this channel. Now copy and paste it one more time. Aren't these patterns beautiful, guys? Or am I just nerding out here? And now bring it all the way to the bottom. Good. Okay, you can see the support there. You can start to see how it lines up. And if you can, just let it touch as many of those low points as possible. Good. All right. And then what you could do essentially is you could now also copy and paste it one more time, and you could bring it to the top of what we call those wicks. Or no, those aren't wicks. Those are that's the
ATR.
SSL.
It's an ATR.
Right. Got it. Okay. So what you could see then is based off of the way that Bitcoin or any by the way, this is applied to any marketplace, any asset. The way that it's worked before is we've now reached a new resistance point. And if all those things that I mentioned earlier are true, you could see now from a technical perspective, from a market psychology perspective, how once again, once Bitcoin retraces, it could very well repeat the past for what would be a fourth time now. And
so this is what I see, you know, like just using kind of some logic, right? And this is where it gets real subjective, guys. So we pierce this. So for me, if I were to see this, I'd be like, oh, well, this is a really strong move, right? We broke support here. Now we've come down to prior support, and now, you know, this has become resistance again, somewhat, right? So what happens if it breaches this support and heads above, I mean, I guess 89, 88 is this resistance, sorry, not support. What happens if it breaches this? Do we keep going? Do we come down? I don't know. And this is where like using TA for me sometimes can be very confusing,
Yeah. Yeah. So, this is where, again, we bring ourselves back to probability, right? So it would be like me saying, because I work with people in all aspects of their life. If I was coaching a girl who was in a relationship, Gavin and I were just talking about somebody like this with a partner who was cheating on them, I would say to them, listen, the best predictor of the future is the past, right? Wouldn't we all agree with that? Like if this guy's cheated on you multiple times, the chances are, we're talking probability. I can't tell you not him. I didn't design him. I didn't create him. I'm not able to define his actions, but what I could tell you is based off the fact there's a high probability that he will repeat again what he did in the past. And market psychology is no different. So what we look at then is we see these patterns and we would say to ourselves, okay, based off of what we understand here and based on looking at these patterns, if Bitcoin, because it's part of the nature of the pattern, made a healthy retracement, meaning that it corrected back down to a level that would be reflective of past corrections that we've seen there. When I say a correction, I'm talking about the downtrend where you see it's gone red. If it's corrected to a healthy level again and held support, and then we hear continued positive fundamental news, then probabilistically, we know there's a very good chance that it's going to surge again. To what level? Nobody knows. And in fact, this would get a little bit too complicated for this call because we don't have that much time left together. But maybe on future calls, we'll be able to get into some more of this and how I personally would forecast this. But that's what we would look at. We use the technical analysis almost like a blueprint. And then we would say, okay, based off of the past, what's a likely repetition in the future? And by the way, we also look at now, that middle section there where you see the market had the surge, that big middle section. Move it to the left a little, your cursor to the left. There you go. That section right there. That section and what you see exactly horizontal to the right, that all becomes psychological support. That means that there's been a lot of price action over history now in that space. And so it's very unlikely, probabilities again, very unlikely. That's a consistent, monogamous, stable boyfriend. Very unlikely that level is going to be broken. Very unlikely. So
you mean this middle line,
the middle section. So you could draw the diagonal line which you've drawn, but then you could actually take a box. Do you know how to draw the box? Go to the little paint. You have the paintbrush right above the T. Right above the T. There you go.
Oh, yeah. Oh, okay.
Yeah. And then go down right rectangle. Perfect. Yeah. And then now pull the side of that rectangle all the way back. There you go. You see it, guys? And then pull it down a little bit. There you go. That section right there. Thank you so much for doing that. It makes it so much easier to see. And you can see it already. Look where the price action of Bitcoin fell to. It fell to just about that range. And that's because that price range there, psychologically, has been well-founded now since 2020, early 2021, maybe even 2020. Yeah, early 21, right? And this is how the psychology works. So that's why I was able to tell, friends and family, look, this is where I think Bitcoin is going to fall to probabilistically based off of these support regions. And sure enough, as you guys saw on my chart and as you see on Gavin's here, that's exactly what happened, right? So the more that we dive into this, guys, we haven't even gotten into on this one, which we will on the next, our own personal psychology, which is the most important. Getting away from our biases, our confirmation bias, our loss to aversion, getting away from these default psychological and behavioral functions that will lead us to end up making decisions financially that will not benefit us in the long run, and that the market masters have mastered and are the reason that they are able to win when the herd loses, when herd goes into herd mentality. But I hope that was useful. I hope you guys got to see some of that. I know that seeing it visually for me really reinforces a lot of the stuff we're talking about. How do you feel about that, Gavin?
Yeah, no, I do. I see it. And again, guys, gals, like chances are a lot of you are going to be investing and not trading, but there could be some gems in here for you. Like, let's say, for instance, one of the things that I have been using is I haven't been using it. I take that back. That I would recommend using is the Fear and Greed Index, right? And for those of you who have been sticking around, you heard me talk about this last week. I did a lot of content on it on Instagram. But statistically speaking, if you see this go above 80, probably a good time, to start taking some profit, if not selling. Now, it hung up here for a little while, obviously, and you would have missed out on a lot right here. January of 2021, we would have hit 90,000 here. This is probably, though, like, I would probably not be buying at that point, right? And I would be using this as a gauge, because when people get this greedy, that's when like the mania starts kicking in. And maybe you wait for kind of the first real downturn here. Here, I think if you would have gotten in the Fear and Greed Index right here, less than 10, that would have been a really good buying opportunity at 5,000. And even if you would have sold, like, let's say, for instance, the Fear and Greed Index starts like really tanking. You just say, you know what, after it hits 40 or whatever, maybe a midpoint, I'm selling.
Now, just to be clear, guys, just so you can see it, that yellow line at the bottom is the price action that's identical to the chart that we were just showing you, the trading chart, just so you see. So that's the price of Bitcoin. So as Deven runs his mouse, you can see how the Fear and Greed Index responds based off of the depth and the height of Bitcoin's price. So when you see it at the very height of its price, in any one of those movements upward, you're going to see either extreme greed or it'll be neutral. And when you see it at the very bottom, you're going to see it be extreme fear or extreme neutrality.
Yeah. So, for me, like, even down here, this would have been a great buying point, even though, you're buying at 32, maybe you're waiting for it to come down, because it did come down to like the tens. But then, we did have this double top, and then the real fear kicked in here. So, you could have gotten away here, like by selling in the 20s and made, sold at 53,000 and still 10x your money, even though you didn't catch the top, which, by the way, like, take that out of your brain right now. That's another psychological barrier. I've gotten lucky and sold some tops. I've also gotten unlucky and sold some bottoms and capitulated. So you want to, but this to me, especially when it's regarding Bitcoin, maybe you want to hodl Bitcoin. You think that it's going to go up forever. Me personally, I don't want to go through the drawdowns. But maybe you do. Maybe you're cool with that. Before DCAing in, I would not be DCAing in up here. I don't care what Michael Saylor tells you or some of these Bitcoin maxis. You just always DCA, always DCA. Be smart. Don't DCA in here when people are just, the mania is setting in, because chances are you're going down. You're going down, right? So anyways, guys, gals, we're at the hour.
Can I just answer a quick question for somebody? I was just manning the chat because I hadn't looked at it yet.
Yep.
Can you go back to the other chart quickly? Because somebody was asking about Wix. And I want to explain this and explain how we would look at it. We'll just do it quickly. So again, more conversation here, but so you understand how the wicks are like a candle. We call those beautiful blue things on my chart. You could see they were green or they're red. Those are candles. And a candle is created depending on what the time view is. And right now we're looking at the month. So the candle would be created for that month where the price opened and where the price closed. And if it closed at the end of the month lower than where it opened, the candle is going to be red. And if it closed at a higher price point, it's going to be blue or green. Green was on my chart, right? So that's how the candle's made. The wick is where the total price action went to during the month. So let's say that just arbitrarily an asset opens at $10, right, in the month and closes at 50. That's a nice, beautiful move upwards. You're going to see a green candle, right? But perhaps in that month, it went all the way to 75. So during the month, it went to 75, and then it dropped back down, and then it closed the month of March at 50. You're going to see a candle where it went all the way to 75. So somebody was asking, do we draw these resistances, those top lines, on the actual candle or on the wicks? And the answer for me is both. And the reason that I do both is because the candle is more dependable, because that's where the price action actually closed. But the wick can show you the potential for a trap. So in other words, if I see that the price of Bitcoin goes above the candle, I'm also looking at prior wicks to see, like, to prevent me from getting too exuberant or too excited about the fact that it's broken a new level, because it's done that in the past, right? And so I could see, all right, it has surged an additional 7 or 12% in the past and dropped. So I'm not going to say that we're in new territory until we're above those actual wicks. Does that make sense? So I look at them both, but I draw the TA lines, we call them, the supports and resistances, on the actual candles themselves. And most TA analysis people do as well, because that's where you get a greater foundation for the price action. Hopefully that answered the question.
Awesome.
Yeah.
All right, guys and gals. Again, if this is your first time visiting our channel, give us a like and subscribe. We're doing our best to build the channel to bring more really good content as it pertains to psychology and crypto, because I think that there's a big time need for this out there. Not a lot of people talk about the psychology of this, and it's really important that we keep our mindset right. Because I personally have even been faced with depression in the crypto market, and I've had to be like, okay, I gotta have a community. I gotta be able to talk to somebody. I gotta hear just outside of my own head, like, hey, it's okay. Sometimes it's okay to even lose, right? You're not going to come in and hit a grand slam. It may be like the worst thing that could happen to you is coming in and hitting a grand slam, because that's going back to the confirmation bias that Nick was talking about. So keep showing up, guys and gals. We're going to be doing this live every week, starting at 4 p.m. Eastern on Thursdays. And we're going to keep bringing you some good stuff here. So
absolutely, thanks, guys. Thank you so much for joining us. We'll get more deeply into psychology in future lives together, and also then how you can, we're going to give you tools to help you start to mitigate the risks around your own personal psychology and the greater market at large. So thank you very much for joining us. We love being here.
Cheers.